Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. I wanted to do more of a vlog type video on Friday when I traded SPRT, which support.com had complete ups and downs. It was a pretty wild ride. I'll explain what I did in the position and did make a decent profit on it, but it's definitely a pretty scary position. I think there is some opportunities here with the current share price, and we'll look at some of the possible options they could do with this option. If you're interested in looking at more videos on these high implied volatilities, deep out of the money, check out my playlists and my videos below. And like, subscribe, all that good stuff definitely helps out the channel. We're at 2,800 and change subs, so definitely appreciate everything. And let's get right to it. All right, so this is support.com, which is an extremely high implied volatility stock. It was actually the most IV I've traded in a position all year. It was over 400% IV at one point. Just to start the week off, on Monday this week, I did a cash secured put at 5.5 when the stock was at 16 and change, pretty far out of the money. It was at 0.2 premium, so good 4.5% in about 3 weeks. And then the stock just skyrocketed up to 39 on Friday morning, went all the way to a high of 53.72, and a roller coaster ride down to 26 at the close. So just on Friday, it made 33% change gain just for the day, 184% in the past 5 days. What was interesting was the 5.5 that I originally had on Monday. It went from 0.2 down to 0.15 in about 2 days or so. This would have been a decent return if I just bought the close to get 1% in about a day or two. Decided to hold it, and the stocks continued to increase from Monday to Thursday, even not nearly as much as it did before, but it was having a pretty good increase. However, the premium was not dropping. It was staying at 0.15 forever. And I was trying to get that 0.1 by the close. It wouldn't happen until Friday. And then when Friday happened, I did quite a few other positions. All right, so let me go over what actually happened on Friday. I actually did 3 total positions on this stock. 2 of them were good. One of them not horrible. And I'm ended in a place where I was pretty much back to where I was in the beginning of the day. So let's take a look. Okay, these were all the positions I made after the 5.5 bought to close pretty much at open on Friday after the rocket ship to the moon. So I started with 6 cash secured puts. These are all for 917, by the way. The stock price at the time was 43.10, and I sold the strike price at 10, insanely far out of the money. Again, the IV was over 400%. Premium received was $609 for 6 positions, so a little over $100 per premium collected on each position, which is a 10% return in 3 weeks, really deep out of the money. The stock continued to rise up to $51, so I bought to close this position for $480, literally in about 2 hours, made $129 in return. So after I bought to close for that profit, the stock was at 51.59. I essentially did another catch your put trade with only 4 positions, so about the same amount of money in use. And I decided to go with a 15 strike price, increase the strike price, and received $863 in premium for just 4 positions. So $863 divided by 4, we're looking at $215 per option, still really deep out of the money, almost 75% or more. And was a little scared of it at the time. It actually started to decrease quite a bit, went down to the 30s. So I bought to close it, actually had a slight loss of $57. And I pretty much went back to where I was before. I went up to the strike price, or actually down to a strike price of 11. And I made that on 5 positions, made $515 in premium. That's what I'm currently with. And I think 11 might be a more reasonable play here, depending on what happens to the stock. The delta is still 0.05, so still have a good return right now, and 1 out of every 20 chances this will actually happen, which I think are pretty good odds. but did get a little spooked at the 15 because I don't want to be bag holding at 15 if it's at 11 or lower, and the IV might decrease, which will make a lot less premiums be collected. All right, so let me go over what actually happened on Friday. I actually did 3 total positions on this stock. 2 of them were good, one of them not horrible, and I'm ended in a place where I was pretty much back to where I was in the beginning of the day. So let's take a look. All right, so currently the stock's at 26.33. After hours on Sunday is up 6% to 27. So maybe in the beginning of Monday, you'd be able to get pretty close in terms of premium received. So let's go to the option chain for SRPT. I'm gonna look at 19 days. You could consider 47, but I'd go even further out of the money if it's that long. 19 days still has good premiums. The 85 puts are going for 0. That's not right. Let's look at another place to find our data. All right, so even some websites don't have the proper data because they don't know what the options should be. So I'm going here on Street Smart Edge here. For 917, the 11 cash secured put will still pay between 115 to 120. So if you're watching this before Monday, you can place an order in for 115. Right now, the delta is only 0.07. The theoretical IV went down to 356. Again, it was in the mid 400s on Friday. So maybe there's a little bit of IV drop. There's a chance that this happens, or there's a chance Wall Street bets might continue to pump this thing up and may not necessarily hold and go down again. But 115 over 11, we're looking at a 10% return in only 3 weeks. If you want to be a little more risky, you could go near the middle teens. 15 is still paying 275. So 275 over 15, we're looking at a 18% return in a few weeks. If you want to be very safe about it, let's go really, really far out of the money here. And you could sell a 6 for 0.2. Still get 3% return in 3 weeks. And even if the stock drops a ton, let's say it goes to 5, you still could get on this position, you can sell covered calls the next month out at 6 and make a really good return there. So I think conservative bet, cash secured put at 6. Reasonable bet, cash secured put around 11. And an aggressive play, cash secured put at 15. Okay, so if you're interested in evaluating some of these very deep, high implied volatility trades where you can earn 5+% a month, definitely check out my Patreon. It's patreon.com/investingteacher. You want to sign up on September 1st. It will actually be free for the entire month. And you get one-on-one help from me, private Discord, and I'll be making 2 cash secured put recommendations each trading day, right to your inbox, right into the Discord. I have a nice interactive group there, can answer any of the questions you have. So if you're interested, just check it out. You can leave a comment down below if you have any questions on this position or any other high implied volatility positions. I also have BBIG that skyrocketed my covered calls at 3.5, and it's up to 7 or 8. Who knows what will be on Monday. So again, I'm the investing teacher, high school science teacher, teaching others how to invest. Be good out there, make some money, and I'll see you guys next time.